Ayubowan, and a very good afternoon, ladies and gentlemen. We are delighted to welcome each of you, our esteemed guests, to this forum on growth through infrastructure, the critical role of infrastructure for construction, real estate, and the macroeconomy, organized by the Research Intelligence Unit. Now, let's take a moment to talk about RIUNIT. The Research Intelligence Unit, ladies and gentlemen, is a leading research firm established in 2003, committed to delivering exceptional and timely market intelligence while maintaining high standards of ethics and integrity. With offices in Colombo, London, Male, Dhaka, and operational presence across Asia, including Nepal, the Philippines, and Australia. We have facilitated diverse research studies across multiple sectors throughout the region. Our expertise is specifically strong in real estate and construction, where we have consulted hundreds of feasibility studies for mixed developments, hotels, residential, retail, and commercial warehouse projects. We provide monthly market updates on Sri Lanka's real estate market and deliver strategic market intelligence to our clients. On the onset, ladies and gentlemen, we would like to say a big thank you to our valuable sponsors who have come on board to make this event a success. Our thanks goes to Hera Constructions by Homelands Group and Maxon's Mesh Industries. We would also like to thank Lanka Exhibition and Conference Services and the team behind the scenes for helping to organize this event. Now, mentioning the segments that we will be having during this forum. It would be comprising of 2 panel discussions with a 20-minute tea break in between the sessions. To begin today's proceedings, I would like to cordially invite our chief guest for today's forum, Dr. Sulakshana Jayawardena, Director General, Board of Investment, Sri Lanka, to address the gathering.
Good afternoon, distinguished invitees, panel members, panelists, and also other delegates, ladies and gentlemen. It is indeed pleasure for me to be here and to deliver keynote speech on this important event, RIUNIT Forum. So, parallel to the exhibition that arranged, and also you have selected timely topic to discuss, because one of the key requirement of the country is infrastructure development for the growth. So in that context, even during the opening ceremony of the exhibition, some of the speakers who were addressing the gathering explained emphasized the requirement of infrastructure development. I would like to go with the investment and infrastructure development rather than talking on only the infrastructure development, because the country or the government has envisaged to attract foreign direct investment to the country, considering the requirement of hard currency inflows to the country after the economic recession. Everybody knows that what kind of experience was that. After the recession, economic recession, we had a lot of challenges. We had to improve the government revenue. We had to implement social safety net programs to give relief for the vulnerable and poor and severely poor families or the households. And also, meantime, government has to control expenditures. As per the Public Finance Management Act, we had to control, manage whatever the revenues received by the Treasury. So in that context, now there are 2 challenges. One is the requirement of infrastructure development. The other one is manage whatever the revenue that you are having. So those are not match each other. In that context, we know that during that period, we had a lot of difficulties in terms of infrastructure development. Even right now also there are certain limitations on infrastructure development. By using public investment or the public finance, as we need to manage government's expenditure level below than 13% of GDP. If we are going to improve GDP, we can, or we will be having more flexibility in terms of amount of the expenditure or the level of the expenditure. But now we need to improve or enhance the level of foreign direct investments and also the local investment. Government also not in a position to make public investment to develop infrastructure. Now the stakeholders who are involved in the infrastructure development, they had a lot of challenges, difficulties because of the less development of the infrastructure. Now we plan to attract foreign direct investments. Government is having a lot of limitations in terms of foreign direct investments and also infrastructure development. Private sector also having same kind of difficulties, because when it comes to the infrastructure development, government is the key stakeholder who puts money or the finance or funds for the development. When it comes to the attraction of foreign direct investment, it is obvious that they evaluate, they do their due diligence whether Sri Lanka is having enough infrastructure and also timely. Even as a BOI, we also having same challenge. Because if you go through the figures of the industrial zones or export-oriented zones, which are being maintained by and regulated by the BOI, except very few zones, we have utilized whatever the available lands up to the optimum level or the maximum level. And also, even some of the investors, for their expansion, the requirement is some of the infrastructure in terms of utilities, water, electricity, and network, road network. So we are having some challenges on facilitating some of the investors who are seeking opportunity to expand their investments. Lack of infrastructure for provision of water, electricity, there are a lot of challenges. So, we need foreign direct investments. Meantime, we need to develop infrastructure. It is a kind of a dilemma. Now, any issue, we need to find solution. We need to find answers, and we need to address the issues. So we need to think out of the box. Even we have planned to develop zones, industrial zones, or the export-oriented BOI zones in various districts. We are facing a lot of challenges because once the investor comes to the BOI, definitely they will ask whether adequate electricity connection is there, supply is there, or water facility is there, road network is up to the satisfactory level. or not? So because we experience this kind of issues in terms of facilitating foreign direct investments. So in that context, this kind of discussions, this kind of panel discussions to get various views, opinions from the stakeholders are utmost important. So one of the answer, because I explained challenges, issues pertain to attract not only the foreign direct investors, even for the local investors. So one of the mechanism or method that we are going to use it, public-private partnerships. When it comes to the public-private partnerships, again, there is no proper legal framework to implement public-private partnerships in Sri Lanka. Government has recognized this requirement. Now we are in the process of, the latter part of the introduction of necessary legal provisions for the implementation of infrastructure projects through public-private partnership mechanism. So the private sector representatives, CEOs, chairmen who are sitting in the audience. So this new legal framework will be introduced very soon. Our target is to introduce it within third quarter of this year. So there are ways and means to address this kind of challenges. I hope that during the panel discussions, during the exhibition, we will be able to share our thoughts, our ideas, how we can overcome this kind of challenges pertain infrastructure development, which will create a conducive environment for the attract investors, investments to Sri Lanka. That will create a platform for meeting external stability of this country and also economic growth as we planned, as the government planned to achieve at least in this year 4% of economic growth and also other targets in coming years. So hope that everybody will be contributing for this endeavor of the government to make or achieved envisaged economic growth of this country. So thank you very much for your patient listening. I hope that you will be having productive discussions, panel discussions during the session, and thank you very much.
Thank you, Dr. Jayawardena, for your valuable words. Please join me in giving our chief guest another round of applause. A louder one, please. Okay. With that, we can now begin the first session, which relates to infrastructure investment dynamics. Who, what, where, and how. We cordially invite Dr. Anil Priyanka, Senior Consultant RIUNIT, on stage as he will be moderating the first panel discussion. Our panelists are Ms. Priyanka Samaravira, Executive Director, Investment Promotion and Research, Board of Investment Sri Lanka, Mr. Ishrat Rauf, Managing Director, ADL Capital, and Mr. Revan Vikramasuriya, Director General, Colombo Port City Economic Commission. May we please have a round of applause as we welcome our panelists.
Thank you, Chief Guest Dr. Jayawardena, for setting the stage for this interesting panel discussion. We are privileged to have a panel of highly distinguished members, ladies and gentlemen, who can share valuable insights on infrastructure investment dynamics, including specific locations that attract investment, the profiles of the investors, which type of investments are attractive, and how investors and investments are sourced. I'm Anil Badavitsana, as I was introduced already, and I'm joined by, again, from the BOI, an executive director, also in charge of research and investments, Ms. Priyanka Samaravira, and Mr. Revan Vikramasuriya, who is an expert on financial markets, and also an executive director, and he's actually the managing director of ADL Capital, is Mr. Ishrat Raif. So my first question is actually to keep this theme going, is to Ms. Priyanka Samaravira. Yes, and as you're on the front line of dealing with foreign investors in Sri Lanka, can you share your thoughts on the types of investment opportunities that the investors are looking for?
Thank you for the question, Doctor. Actually, if I start with what is the infrastructure investment portfolio within the BOI, at the moment we have over 2,000 commercial projects, in operation projects, and out of which around 244, that is around 12% only is the infrastructure. But when you consider the FDI inflow to the country, that 12% amount to 54% of the FDI. So you can imagine the importance of the infrastructure projects in terms of FDI attraction as well. So if we go by our data, the most prominent subsector is shop and office complexes with around $3 billion investment, and also housing. So with the change of the economic landscape of the country, we are focusing more towards sectors such as port development, logistics sector, as well as in terms of the renewable energy, that battery storage. So likewise, actually, BOI has undertaken some sort of analysis and find out certain structural projects in the infrastructure sector. For example, this West Container Terminal 2, and there are a couple of logistic sector projects within the port of Colombo, as well as in Blue Mandal area, as well as in Gampaha. So we have identified certain structural projects there, which we can go for PPP basis. And apart from that, BOI has identified, and we are planning to develop 4 technoparks, one in Kurunegala, Galle, Digana, and Nuwara. So for which we encourage the investment in terms of PPP basis. And actually at the moment we have even developed the concessionary agreements with the support of the ADB. So these projects will be coming very soon.
Thank you. That's a very comprehensive. Actually, I was going to ask you about the PPP, which your chairman also touched upon. So, in fact, yes, IFC and ADB have been pioneers in this region for promoting PPP, public-private partnership projects, and I think getting their advice, I think, is the best way forward. So that's very good. So now I would like to turn to Revan. Let's start with the potentially most significant investment magnet for the country at the moment, which is the port city. How much investment in infrastructure has already been made in that, and what is needed more to attract real investment?
Yeah, thank you very much for that question. The port city was or commenced after a vision going back to 2015. It was established as a BOI company, gazetted as a strategic development project. established to reclaim a certain area of land in the Colombo harbor, or next to the Colombo harbor, the south terminal. To date, that project has resulted in approximately $1.4 billion of investment, which is FDI. As Priyanka was mentioning, this also to a certain extent is a public-private partnership with the government and the project company Czech Port City Colombo Private Limited. The infrastructure or the reclamation part and what we call as the horizontal infrastructure is almost coming to an end. With $1.4 billion in investment, the project company is sharing in approximately 40% or 45% of the land area that was reclaimed on a leasehold basis. So the land continues to be owned by the government of Sri Lanka 100%. And because of the $1.4 billion investment by Czech Port City Colombo Private Limited, they were given a leasehold right on approximately 45% of that land. The next phase of this project is to complete or commence and complete what we call the vertical infrastructure, the putting up of the buildings, an expansion of the central business district. Out of the 74 land parcels where development activities can be carried out, to date we have leased 10 land parcels. Out of the 10, approximately 6 land parcels construction work has commenced, and the project cost of those 6 is approximately $500 billion. Over the next 6 months, we expect to see construction work commence on the other 4 land parcels that have been leased. Again, you're looking at possibly $500 to even $1 billion for the development work, land and development costs on those land parcels. We expect to see significant investment coming in on the back of the stable policies that we are seeing being implemented by the government. And this can clearly be a catalyst to transform the landscape of Colombo and then the economic environment in the country. What needs to be highlighted here is the port city is one of, I would say, government institutions that's managing 269 hectares of land. But you have the Board of Investment, you had the Director General speak as well as the chief guest, which is the apex body in the country to drive investment. So we are pretty confident that the outlook for attracting investment into the port city on the back of what has just transpired over the last 6 months is significant, and the opportunity is bountiful going forward.
In present day monetary value, how much more investment is needed, do you think, in terms of billions of dollars, to make it a complete success, and how long do you think it'll take? Any guesstimates? Yeah, I know it's a $1 billion question or $1 billion question.
So when you look at the total land area across the 74 marketable plots, right? The development control regulation is gazetted, so everybody knows, or it is clearly articulated how much building space can be put on each plot. The total building space across the 74 marketable plots is 6.3 million square meters. Of the 6.3 million square meters, 50% is residential. And we've seen three companies actually driving residential developments. Absolutely successful achievement from the government's perspective. 25% is retail and about 25% is commercial. So when you look at the development cost of those 6.3 million square meters of built up floor area, factor in the land price or the lease cost of the land for 99 years, you're looking at anywhere between 12 to 15 billion dollars to develop and build this space out. Now, the second part of your question, how long can this be done, right? You talk to this is Infracon, construction companies. It's very difficult to even say how long it will take to put up a 10,000 square foot house, right? They come in with a timeline and all these timelines get extended. So what we try to see here is we put milestones. In year 1, what can we lease? As I mentioned earlier, we've leased 10 parcels of land, 6 have already commenced. We'd like to see how we can commence construction work or approve plans, commence construction on at least 4. possibly going into the end of this year or early next year, if we can lease out another 5 plots of land, I think this is amazing progress, because you need to be able to maximize the revenue potential for the government, because this is government land at the end of the day. So you need to phase it out. You shouldn't rush into building, and any master plan development, you don't build it out in one shot. You build it out in phases, because how do you develop it? You build a certain phase, see the success of it, you go into the next phase, asking for a premium, and this is a planned process. Depending on how investor uptake happens, we go out accordingly and identify investors, and that would primarily drive the timelines.
Thank you, Rohan. Yeah, that's an excellent answer, but I think it has evolved a lot because it's now investor friendly, because there was a time that people were debating whether you need a visa to get into the port city, and also you had these QR codes and everything, you had to scan to get in and out, there was so much of secrecy. But I think since for the last couple of years, the direction has changed and it's in the right direction. And from my experience in the Maldives, I can tell you, the moment you start housing construction, residential property, it's a kind of a multiplier. It will basically attract a lot of interest and investment here. So the next question is to Mr. Ishrat Rahif. Actually, you are a strong advocate of capital market development.
As well. We also have been engaging with investors from the Middle East and all, but that's more debt related rather than equity related. But what we've seen, and I think we've also seen, there is this disconnect between investors there who are actually genuinely very keen on bringing money here, albeit on like a short-term basis. And the manner in which we responded, I think infrastructure is something I think we're missing the bus there to some extent, because a lot of our borrowing, that's, maybe I'm digressing here a bit, but a lot of the borrowing that we've done thus far is just sovereign bonds being issued without an underlying whatever, you borrow because you need to repay a previous loan. And a lot of the borrowing is also about 3 to 5 years, sometimes a little bit longer, but that's a sweet point. 5 years is probably a sweet point in terms of borrowings. If you actually develop an infrastructure, proper infrastructure fund, which is also asset-backed, because I think you know that my background also is in Islamic finance, where the funding has to have an asset backing or an asset base. I believe there will be much more appetite. And also the other attractive thing is you can bring in funds of a longer tenor, maybe the 8 years, the 10 years, the 13 years, because you're matching a project. You were speaking about how many years something will take for fruition. You're matching the tenor with the funding, whereas here you're just taking a loan just because, like I said, you're taking to prepay a previous loan rather than actually contributing to the proper development of the country or the economy or whatever. So in that sense, I think infrastructure funding is something I believe has been ignored. Capital markets have been ignored, and I think I can see it. I think we're having the capital markets conference. I think we've been part of it for the last 14 years. I think Roshan also has spoken at it a couple of times. It's, I think, on the 22nd of this month. And one of the things which we are encouraged by is the fact that now capital markets are seen not just as a bridge between, say, insurance and banking and all, but as a genuine catalyst to economic development, because I think it's been ignored thus far. Most sectors, it's just been the stock market, which is sometimes it's a playground of the rich type of thing. Not really, now it's more fundamental things that are happening. And I think capital markets have a huge role to play. But the issue is that whether the authorities actually become cognizant of the fact and do something about it in order to actually use, like I said, infrastructure fund is a good starting point. Because the appetite, despite all the issues the country has faced, not right now because current is a global thing, but the issues that were sort of unique to us, which we've experienced over the last couple of years for different reasons, despite all that, when we went back, say, to some of the institutions in the Middle East and said, would you look at Sri Lanka again? The immediate response was, why not? Despite our rating having dropped to what it has, thankfully it's now reversing. Because I think we've always heard this thing, Sri Lanka is the darling of investors, and I believe that's to be true. A lot of people like to invest in Sri Lanka, not just because of the investment climate, it's also because Sri Lanka is Sri Lanka. I'm saying people like what they see here. The country is nice. We have a good product. You talk about the Maldives. It has its own luster, and Sri Lanka has its own idiosyncrasies, which many investors overseas find attractive. So I think we're in a good place, but it's a question of trying to sort of convert that into proper, funding and something that, with a coherent plan that we can actually sell to investors.
Thank you very much. ADL Capital has done so much for raising, funds. Maldives, I remember the first ever investment forum in the Maldives more than 10 years ago. I was part of that. And I think the Maldives government has taken on the sukuk, which is like a listed, debt instruments, right? Which you can, because based on the assets, the greatest asset we have is 80% of the land is owned by the government. Right, so that asset with the infrastructure improvements adds value, where the infusion of capital can happen based on the asset backing, right? Absolutely. Asset backing. So I think there are instruments that, as you said, it's not utilized properly. We issue sovereign bonds and all that, but they are not actually rated. With a rating, if we can issue, bonds which are listed on stock exchange, those capital market developments can attract a lot of funds, and we can use the land parcels that are improved with the infrastructure to do that. So,
if I can just add to that, since you mentioned it, sukuk, the first sukuk was issued last. We are part of it for Vidul Lanka, which was again renewable energy. I think they play a big role in this conference as well. And the gazettes and the rules have been amended but what we need is a sovereign sukuk. Like I said, Maldives has done, why can't we?
Yes, exactly. We should do that. So I think it brings to, again, back to the BOI. Priyanka, could you tell me that over the next 5 years, how do you see the landscape developing, and what are the incentives in place for the purpose of attracting more investment, FDIs that we need for the development of this country?
Yeah, actually, in terms of the 5-year plan, we have established a 5-year plan from 26 to 2030, where at the end of 2030, we expect to have committed FDI, that is projects approved, around 4 billion, as well as the realized FDI, that is actually coming to country, again, another 4 billion. So if we consider the infrastructure piece within this scenario, for the 26, our overall target committed FDI is 2 billion and realized is 1.5 billion. And out of that, we are planning to have around 30 to 40% from the infrastructure projects. So when consider the investment incentives, what I wanted to highlight is in 2008, we had this Strategic Development Project Act, which was a very attractive piece of legislation to attract FDI into the infrastructure sector. Under this piece of legislation, we have approved and that are in place around 15 projects, and out of which 2 projects are in the manufacturing sector, and the balance is in either infrastructure or tourism related projects. So when consider the FDI inflow, even today, when take the annual FDI figure, around over 30% is from these SDP projects. So we had to keep it on hold in around 2023 on IMF instructions, because we need to establish some sort of very transparent mechanism to approve these projects. And I am happy to say that now we have done the amendment to the SDP Act, and the regulations are in place, which is effective from 1st of April this year. So with that, we think that there is a tax holiday. There's a tax holiday ranging from 6 to 10 years, depending on the investment. Investment will be ranging from $50 million to over $300 million. And there is an employment cap as well. So if the investment meet that particular criteria, then there will be 6 to 10 years tax holiday. So that will again attract more investment, I hope. And apart from that, we also have this enhanced capital allowance under the Indian revenue, which again give 100 to 200% enhanced capital allowance for the investment above $3 million. So these two piece of provisions, we hope that will be enable more infrastructure projects to be coming to the country.
One of the main criticisms of the local investors was actually because there's no level playing field. You're giving tax holidays to people who are bringing in funds, but the people who are investing funds locally do not get those same benefits. But I understand the reasons for giving tax holidays for dollar inflows.
I want to make it correct that we don't discriminate between the foreign or local.
So whoever,
investors.
it doesn't have to be dollars, it can be even in local currency?
No, it is US, I mean, even for the SDP, even though we mentioned $50 million above, then that can be equivalent. I mean,
Okay,
not
that's
really need
yes,
to bring it.
earlier the
Yes.
system was skewed towards foreign investment only.
No.
So if a local investment and also
Yeah,
PPP
equivalent
companies,
to the rupee
they'll get the tax holiday.
Yes.
Right, okay, that's great. So that's a good incentive. And I think I'm turning to Revan again. With your international expertise and, market knowledge, what are the policy changes that Sri Lankan government can implement or put forward to attract more foreign investment and even local investment into the infrastructure?
So I think in terms of policy, I think what investors, entrepreneurs, whether they are local or foreign, what they need to be able to do, and especially into infrastructure projects, which are long-term projects, right? It takes long to implement, and then the recovery on that is also over a long period of time. They need to have line of sight on the policy, right? What is the policy going to be applicable to that project over the duration of the project? So it could be 5 years, 10 years, 15 years, 20 years. So that is, I think, the most important factor. And then you need to create an environment that encourages risk-taking, right? So entrepreneurs need to be able to understand and be aware of the fact that they can go into these processes of identifying these infrastructure projects and have clearly laid out timelines on hitting the various toll gates that are required for during doing the due diligence, executing agreements, sorting out the financial aspects, project implementation, project completion, and execution. So clearly articulated, or the investors need to have clarity on the fact that they can start these projects in a timely manner and then execute them and start operationalizing them in a timely manner. I think this is the most important aspect if we are to drive capital into these types of infrastructure developments.
Excellent answer, but what has happened in the past is that when a government starts something, like we had the monorail system and even the port city, we had to pay compensation. One credit to this government is that it has not stopped any of the projects that were started by previous governments. And now the problem is, like, even Japanese investors think twice, because what had happened was it was a stop-go kind of policy, right? So when it's public policy, it has to be binding, because on behalf of the people you're making these commitments. So I think that aspect has been understood by this government, and that's a huge benefit for foreign investment if we can convince that we are an investor-friendly country, and there's no way we are going to turn it around and to say that when the governments change, we stop the policies of the previous government.
I think if I can add to that, and that's absolutely correct, and I've got Priyanka here from the BOI, correct me if I'm wrong, right? The BOI hasn't been in existence, or the GCEC and then the BOI operationalizing 15, 17 SEZs across the country for 45 years or a little more. You've got multinationals operating in these countries for as long as that, right? From America to Australia to Europe to India to whatever. And I don't believe any of those foreign investments that have come in have actually faced any issues. They haven't been nationalized, they haven't been taken over, and they've successfully implemented and continue to implement these factories and these businesses. So this theory or understanding that policies are changing and businesses, when they come in and establish themselves, they come in under one framework and change, I don't think is actually factually correct, right? The next point is, if you look at specifically on the port city, yes, there were challenges, and other than governments changing, there were natural disasters, there were terrorist issues, right? These led to significant delays, right? You can't expect infrastructure projects money to continue during COVID, etc., etc. What we've seen here is, and having seen the commission, the Port City Economic Commission being established in 2021, May, after the Parliament certifying the primary piece of legislation, we've gone through 3 presidencies. We're at the 3rd at the moment. What is a fact is, even businesses or investors who leased land in December 2021 did not do any or did not commence construction activity until January of April, or quarter 1 2025. That is a clear testament to the fact that investors are believing and understanding the confidence that has been established since the government being established at the end of 2024. After that investor breaking ground on 4 land parcels in quarter 1 of 2025, there were active discussions, and we've seen 4 land parcels being leased out in quarter 1 of this year. Out of those 4 land parcels, 3 investors have already broken ground. A clear testament to the fact that the investors in Sri Lanka globally are extremely positive on around the fact that the policy that is being administered or implemented is investor friendly, and the market or Sri Lanka is open to drive or attract foreign investors, and have created an environment to enable investment take place.
Excellent. Yeah, that is the key. Confidence, investor confidence, and being investor friendly. So I would like to throw to the audience, I'm sure you're having burning questions that are related to this foreign investment and infrastructure.
We were granting investment incentives for any project which would change the landscape of the country. That was how the Act says it. So for the projects that we identified as there is an economic significance, we could have given investment incentives in terms of the tax holidays for up to maybe 25 years. It could be tax holiday plus concessionary. But with the recent amendment, with the IMF suggestion, we have developed some sort of very transparent mechanism, which is investment-based and employment-based, and depending on the sector again. So there the tax holiday is limited up to 10 years. So there's a reduction in the tax holidays compared to previous one, and also some sort of transparent mechanism.
Used now to attract high-end technology-based investments to Sri Lanka, because Sri Lanka has a middle-income, upper middle-income country, and with high education levels will not be a suitable place for investment which are coming to Vietnam or even tourism-based industries in Maldives, because for the development purpose, government body also can direct the source of investment as high-end and appropriate for that, because now even manufacturing garments or any thing related, raw material related thing, immediate things will be not profitable to Sri Lanka, and those ventures are moving on to Bangladesh and other countries. So to keep the investment in Sri Lanka and develop that for the whole economic development, there's a different type of industries and services are needed in Sri Lanka. How to do it?
Yes, it can be answered in several ways. I mean, in terms of what we can offer, as I mentioned, that we have developed this investment incentives in terms of SDP and SDP Act, and also the enhanced capital allowance. So that will be a one way of attracting investments. And also we are planning to establish this 4 technoparks, again with the PPP model, and with the assistance of ADB that we have developed this concessionary agreement. So that will be coming very soon. So that will be another thing. And also we are planning to, discussions are underway that we are planning to have some sort of, for example, Japanese zones, identified locations. They are doing some sort of feasibility studies to see what areas or what locations would be more attractive for Japanese-related investments. So likewise, there are a couple of strategies that we have identified to improve the techno projects into the country.
That's very interesting because I think we've got to harness the potential of the youth who are, I mean, when they get techno-savvy and when they get qualified, most of them migrate. And there's a huge drain of our, youthful resource that we have. The human resource is the biggest capital we have, the greatest asset. So yes, that's a very interesting question. Thank you for that, sir. Any other questions? Yes.
Thank you for a very interesting overview. My question specifically is for the lady from BOI. You already have 2 sites in Digana and in Kurunagala. So are you planning to expand this, or are you planning a different location altogether? Second question to everyone, simply for a matter of curiosity, because this is not something I've been reading about. We are talking about that due to the paucity of labor, that people who are having projects have to import, labor from Nepal, Malaysia, etc. But on the other hand, we also see that there is a lot of people, labor, leaving Sri Lanka, going to the Middle East, going to Romania, etc. So how is it that we are either not able to engage the local labor, or is it that the local labor is not very appropriate for the needs?
Yes, in terms of technoparks, actually we have identified 4 technoparks. What will be coming very soon will be Kurunagala and Golwan, because they are in the pipeline, they are some sort of ahead. And then the Ganawa and Nuwara will be there. And apart from that, actually at the moment we are having around 17 EPZs. Some of them are very fully utilized, and we have 2 recently developed one in the Eraur for the dedicated for textile manufacturing, and in the Araboka for pharmaceutical manufacturing. And apart from that, with the government blessings, we are planning to establish 5 more export processing zones within the country, and we are planning to have them for more regional development basis. And we are planning to have 3 zones in the northern province, one in KKS, that's earlier cement factory area, and then one in the Parantan and Mankulam. So there will be 3 in the northern province, and 1 in the eastern province, that is the Kapalture in Trincomalee, and that will be for the heavy industries, and another one in the northwestern province in Iranavilla, which is the former Voice of America's land. So likewise, we are planning to have 5 zones plus these 4 technoparks to be added into the BOI export processing zone basket.
It's excellent news, actually. I hope that that works out, and we wish all the best to the BOI to make
Thank
that
you.
happen. Yeah.
We do product development on that side. So, like I said, we did one with the first listed equivalent of a debenture, which is referred to as Sukuk, was done last June or July for Vidul Lanka, which actually could have been a green Sukuk or a green bond. Right now, I think in the next 3 months, you'll see the first green Sukuk coming out. So which means we are working in that direction, because you're right. I mean, in Sri Lanka, given where we are, given that renewable energy is such a big sector, and also the fact that we are an island, we are also hoping against hope that DFCC, I think, issued a blue bond. So similarly, we want to do a blue sukuk. It's just the equivalent. So debenture sukuk, it's just that it's a slightly different structure, which is non-interest based. And why not the sovereign issue one is? Well, because I think if we can go in that direction, we can also get funding at very concessional pricing. At one stage, I think we really missed the bus there where Sri Lanka could have borrowed at 200 bips below conventional, and we were borrowing at 8%, 8.5%. There are funds that are available in the Middle East at 6. So if you talk about $1 billion, that's over a 5-year, 8-year period. That's like another bond in itself, the saving. Today, those spreads have thinned out because it's not as deep as what it was. But still, I believe that you can, we still are in a position, like I said earlier, the fact that we are who we are, that we can still attract funding and people will still invest in us. And if you can give that additional dimension of being, like you said, a green bond or a blue bond, then you'll be able to attract, because there are so many institutions out there all over the world, I'm not talking about the Middle East or in Europe, we all know this, that have funds allocated for sustainable bonds. That's a general term that used to describe green and blue bonds. And coincidentally, they say this is one of the topics that we are bringing up for discussion actually in a couple of weeks' time as well. Why don't we make a more conscious, a concerted effort to actually develop that market, because we are going to get funding at concessional pricing as well. That's a big advantage to us as a country, and it filters down, right? So hopefully you will see more green issuances and blue issuances as well in the not too distant future. So it's like also, it took a little while to actually understand what green, blue. Now they're talking about yellow and orange, and so I'm sort of it's hard to keep track of this. But green and blue, I'm quite familiar with. I'm not sure about the other colors, but anyway. Basically, sustainable financing. Sri Lanka, I think, requires it, and I think we can attract money in that arena, and we can attract it at very attractive prices. Yep. That's the main thing. So as a country, we'd benefit.
Yeah, thank you. That's a comprehensive answer. But I want to have a follow-up question with that. It can be a rainbow fund, a pie in the sky, if you don't have a proper mechanism for it. Like we were talking about the PPP structure, right? Now, if you take Bank Negara, the miracle of the Eastern Tigers was actually the way Malaysia managed the funding. Right? They had set up a Sharia-compliant board at the Bank Negara level, which is their central bank. Now, does our central bank have that in place to issue a sovereign sukuk, which we talked about earlier?
I think it does, because I was part of a sort of an ADB-sponsored project where I was a local consultant, and there was a consultant seated out of Cambridge University also, and we were the two of the same. We passed various things where the central bank was involved, the Inland Revenue was department, but it was spearheaded by the SEC. So it was ADB sponsoring the SEC, and SEC recruited a Hong Kong-based. It was a little convoluted, but a lot of amendments were made as a result of that, which means now that's why listed sukuk are possible, because of those amendments that were made. Similarly, part of the roadmap that we developed, it was a 2-year, it was supposed to be a 1-month project that went on for over a year, but one of the things that we also put in place was a mechanism that you could actually extend it to the sovereign as well, because at the end of the day, if you want to really make them up, private debt is going to get you so. When I say private, means private companies, even if they are listed, finally you want the listed, like you said, the Bank Negaras, how they've sort of accommodated foreign funding. They were able to attract funds like, there are some institutions which will come in, but their minimum investment is like $1 billion. They're not going to come in. So who can borrow $1 billion? Only the sovereign can borrow.
Sovereign can do
so if you have that, I think it's a mindset as well. And I think just one sort of anecdote that, it was an event where, I think it was at the Galadari, something 15, 20 years ago, I remember, about the sovereign does have this concern with sukuks. The disconnect there is that the sovereign is used to giving funds without collateral. Yeah. So they assume that when you say it's asset-backed or asset-based, that it is collateral. But the CEO of NDBIB, Vajra Kulatiraka, at that time, he mentioned this at a big forum and sort of drew a big round of applause as well. He says, countries like South Korea, Germany, the UK, they've issued sukuk with assets. Yes. So who are we with our rate to say we can't give an asset as collateral? And one of the things he said was, let's say our toll roads, why don't you use that as an asset? Exactly. He said, it's not collateral. They're not going to, and
Yeah.
these are his words,
Right.
they're not going to roll up the road,
Yes.
put it in a suitcase and go back with
Yeah.
it if you don't pay. It's just a mechanism that is used
Yeah.
that you need an asset back. I mean, you're an expert. You've done your own Sukha. You all were the first to do it right, at
first to do it,
HDFC.
yeah.
So you know what I'm talking
Yes,
about.
yes.
But I think it's a mindset.
Mindset,
If you
it's
can
sad.
change the mindset to say that, okay, if Great Britain and the state of Saxony can issue sukuk, they are AAA rated countries and states, why can't we?
We've done newspaper articles. But, we are about 10 years too late in getting a Sharia compliant board at the central bank, right? This should have happened,
Long time ago.
a long time ago. But anyway, it's never too late. But again, coming to your question about labor force, we have 19 to 29-year-olds who are unemployed with degrees and all that. Even when the DITWA came, I put a proposal to say that, like what Singapore is doing, go for conscription and train them under the army to build houses and labor, which is respectable kind of things to do. And even farming and all that can be done through national conscription, like you serve national service. Not for combat training, but there are so many carpenters and all these people who were recruited, who did the beautifying of Colombo, all the walkways, those things were done by the army, right? And so why not do it? But then again, it's a mindset. If we have a will, we have a way to do it.
Port City was supposed to reverse the brain drain of many of the professionals who've left Sri Lanka, especially during the economic crisis of 2022. We heard that there will be opportunities for people to earn and the taxation environment will be much better and there will be an influx. Is that something that's real at the moment or is it in the offing? When can we expect that benefit to bear fruit?
I think it is very real at the moment. So with the construction industry taking off, or 3 plots or 4 plots, construction activity taking off, as I mentioned, $500 million projects, that in itself is going to create significant employment opportunities for the businesses that supply the construction industry. From workers to do the work, to the consultants that come in on the EPC side, from engineers, water, electricity, architects, designers, etc. So there is going to be a huge ecosystem of employment opportunities created just across the construction industry. And that you have people on your panel who are developers in one of the land parcels and they can elaborate further on that. Outside of that, what have we done? We've got approximately 180 businesses that are already licensed under the Colombo Port City Economic Commission. These businesses are utilizing approximately 150,000 square meters of office space in and around Colombo. Those office spaces were vacant until then. So there is employment opportunities created directly by these 180 companies, and that we estimate is about 12 to 15,000 jobs. And then when those officers are running in those spaces, the opportunities that are created for servicing those officers, the ecosystem that is there for car hire companies, taxis, restaurants, supermarkets, etc. So even as of now, the contribution to the economy from the Colombo Port City, and you're not even seeing a building come up there, we believe is significant. And as the buildings continue to come up, more companies establish themselves and start operating, you're going to see a significant multiplier effect.
Thank you. I think time is a constraint, so we have to come to an end. And thank you for carefully listening and also participating. And I'm privileged again. I learned a lot from the insights that these panelists share with us. So thank you, Ms. Priyanka. Thank you, Mr. Revan. Thank you, Mr. Raif. And it has been a really inspirational panel session. Thank you so much.
Thank you very much, ladies and gentlemen. May we please request the moderator and our panelists to remain on stage for a moment as we wish to convey our gratitude by presenting a token of appreciation. And to do the honors, I respectfully invite Mr. Roshan Madawala, CEO and founder, RIUNIT. Ms. Priyanka Samaravira, Executive Director, Investment Promotion and Research, BOI Sri Lanka. Mr. Revan Vikramasuriya, Director General, Colombo Port City Economic Commission. Mr. Ishat Rauf, Managing Director, ADL Capital. And finally, our moderator, Dr. Anil Priyanka, Senior Consultant, RIUNIT. We will now move on to the next panel discussion, which is session 2 of the forum, the impact of new infrastructure on construction, real estate, and tourism. The moderator for this session will be Mr. Roshan Madavella, CEO and founder, RIUNIT. Our panelists are Ms. Ramali Tudawe, CEO and Director, Tudawe Brothers, Ms. Hiroshini Fernando, CEO, Executive Director, RIL Properties, and Mr. Saman Hettiarachi, CEO, Homeland Construction. May we please have a round of applause as we welcome our panelists.
Thank you, Vidun, and big thank you to Team Infracon for organizing this event, and to the panel, of course. I was very excited to learn about a conference on infrastructure because infrastructure is critical to the economy, as we all know, right? Because on the one hand, it improves the supply side of the economy with whatever we build, whether it's roads or bridges. The second aspect of it, of course, is the demand side as well. When you spend money, that also stimulates, when you're building roads and things, people are getting an increase in income. Then well-being, something that we don't discuss, when we have better roads and better trains, children will go to school in a better state, people come into work. So it has so many benefits, and I think an economy can't expand without infrastructure, right? So if you're going to continue to grow at 5 or 6%, then that investment into infrastructure has to continue. Right. So I'm going to start with Romali. I'm going to ask you something that we understand the infrastructure projects and the construction sector is very closely intertwined, right? If you look at the data, you see the growth of one closely follows the other. So you being in the front line of this sector in Sri Lanka, what can you say about what you've seen in the last 10 years? I know being on a roller coaster, so like the whole thing.
Thanks, Roshan. Good evening to everyone. And thanks for joining us on a Friday evening. I know you have a lot of other things to do when the weekend hits, but appreciate you being here for the final segment. So when we're talking about the infrastructure-led growth and construction sector, obviously there's a very strong positive correlation. The last 10 years, what we're really talking about is post-war-led infrastructure growth and construction sector development. Consistently for the last 15 years, construction has been contributing between 6 to 9% to the Sri Lankan GDP, barring 1 year, which we did double digits. That's in 2014 and 15. I think the GDP contribution was pegged at about 15%. And this is because of a port city development. So it's a one-off contribution sector. And what we are clearly seeing is a very large construction boom that was led by state sector infrastructure. So you would have heard a lot of mega projects, a lot of highways that came about, ports, and of course the port city itself. And when we're looking at these sort of mega projects, what we have noticed in the last 10 years is it's highly debt-driven, infrastructure-led development. So what this means is a lot of sovereign debt has been incurred to develop these projects, either through bilateral trade, bilateral bonds, sovereign bonds, as well as direct foreign loans that came for infrastructure projects. So when you're looking at how we have started developing into our infrastructure, it's highly debt-driven. And naturally, when there's a lot of infrastructure projects that are coming out, there's also a supply of construction that came out. So in 2020, I think there were over 2,000 registered construction companies in Sri Lanka, which is for a population of 22 million. So that's a high concentration of construction companies that came about. And along with this, of course, you will notice that construction sector was extremely leveraged And there was a lot of local banking exposure to construction. In 2020, just before the crisis, local banking exposure to construction was 20.45%. That's an extremely high segment. And what you notice towards the crisis period is because it's so heavily debt charged and debt driven, the industry itself was vulnerable to external shock factors. And of course, starting from 2019 onwards, as was discussed in the previous panel, all we experienced was external shock factors. So one after the other, the industry started getting hit. And in 2020 itself, you can see that the government was running out of liquidity. So what happens when the government runs out of liquidity for themselves, especially SOEs as well as the authorities like Road Development Authority, Urban Development Authority, once they started running out of money, they also heavily borrowed from the banking sector, which includes the state banking sector like People's Bank and Bank of Ceylon. So once the economic crisis started kicking off, the government ran out of liquidity due to foreign exchange reserves leaking out for the prices of construction material increasing. Increasingly, what they did is they stopped paying the contractors, and that created a liquidity issue. When the liquidity issue arose, obviously, what do contractors do? They borrow from banks. And during this period, one other thing added to all of this sort of being delayed in terms of a reaction, and that was during COVID, the central bank provided a lot of regulatory forbearance which allowed the contractors to restructure their loans. So their asset moratoriums allowed us to kind of continue on like this without the problem really becoming exacerbated until it was too late. So when you say there's a positive correlation, this is the other side of it.
There's a negative one as well.
There's a negative side of it as well. And that's what has taken place. And at the moment, what you're seeing is an economic crisis that took place where in 2022, immediately all capital expenditure stopped. The pipeline froze up. Contractors were defaulted on payment. The banks were defaulted in return. High NPL ratio. And of course, the industry fell into a high risk factor. So this is the other side of infrastructure-led construction growth.
So the good times and the bad times are correlated. Actually, can I just ask, the number of players you said was very high, but I'm sure it's less now. And has that reduction in the number of contractors been biased towards SMEs? Have SME contractors suffered more than the big guys?
I would say completely yes. Smaller contractors have less liquidity, and I think to survive construction, the number one thing you have to have is liquidity. If you run out of money, you come to a rolling stop. This is also very dangerous because smaller contractors don't have the structural support that larger contractors have. Let's say, for example, during a crisis, central bank put out quite a lot of regulation on how to go and restructure your loans. But how many of these small contractors actually have the financial knowledge to go and negotiate and restructure their debt? Yeah. It's not possible. And what happens there is when the construction starts booming again, when if there's repressed demand and there's more projects coming out, what they do is out of desperation, they undercut to get work, which leads them into further problems. So the SME sector was definitely impacted disproportionately.
So the after effects of volatility can be felt even in the period afterwards as they compete, right?
Yes, and often you need a mixed bag of contractors. You need big ones, medium-sized ones, smaller ones, because you need a wide-ranging market to cater for all needs. And unfortunately, in construction, not many people understand how it's run. So there is not a lot of structural support for the industry.
Okay, I'll get back to you on this because one of the things we can explore is also maybe to see how we can become less vulnerable as a construction sector, look at opportunities for linkages. But I want to bring Hiroshini in at this stage. Being an expert on commercial real estate, how important is modern infrastructure as a factor that determines your decisions in your commercial capacity on where to locate new buildings for businesses and office space? How important is infrastructure, and what type of infrastructure do you look at when you look at new office spaces?
I think when we look at property developers on a commercial aspect, we would be looking at the infrastructure that is required to facilitate the client. Now, if we start off, the surrounding infrastructure should be there. Because when we are developing the complex, we would need to ensure the infrastructure required in the building is set up to facilitate the client. But leaving that aside, the infrastructure surrounding it, the transport, the roadway, the accessibility for the clients to come in, then the client staff to accommodate the electricity, all those things we would be looking at. So when we look at development, we would basically look at the location, which has all of these things, which is centrally supported, specifically in the CBD. Even if it is not in the CBD, we would need to ensure that the support systems are in place. Now, like when you go in for a development, even getting the CB connections to ensure that the power supply is adequate and the CB is able to provide that is a key thing, because there are certain areas that the CB is unable to give in the supply. So, and then water, those things need to be looked at, and those are key for any development, because generally commercial spaces are 24-hour operations. So we need to ensure that the client is able to function throughout. So infrastructure is key in deciding the location and the success of the development as well.
Yes.
But just to add on, now I think one of the key things that, because we were talking about Port City, one of the key things that that delayed.
They've gone now. You can
No,
talk.
no, no. But I see the representatives here.
There is some.
Because the doubts the investors had whether the infrastructure there was ready was also a concern. I think that took a while to get established that those are ready. Majority is there now, but that was also a concern. Even though the vertical layout was done, I think that needed to come out. Not the vertical, sorry, the horizontal layout was done, but the infrastructure needed to come in.
So would it be fair to say that you guys are eyeing the Port City as a prime? It must be on your radar, but...
I think as developers, everything should be on our radar.
Okay, a really wise answer. Right, this gives us opportunity to turn to Mr. Saman Hettiarachchi. You had a very important contractor, construction company. What do you see as the biggest opportunities in the island's real estate and infrastructure sectors?
Yes.
I'm going to put them together for you.
Yes.
Right.
Thank you, Roshan. Because actually I'm representing two companies, like the developer and the contractor. So the Homeland now is a developer, and the Hera Construction is a contractor, right? So in the both aspects, I can answer your questions like that. So you know that Sri Lanka is now moving into a new phase of development. So when we are entering that new phase of development, so looking ahead of next 5 years, right? So the main opportunities segmented in three segments. Like first thing is urban development and the standard living conditions. So when urban development happens, so that the government now is investing more money on especially for the developing urban areas. So the people wanted to come into the city areas, right? So when people come into the city areas, they want to have some infrastructure. They want to have the better housing. They want to have the better health care. They want to have the better, people now, the modern people like to work, live, work, and entertain. So that's the concepts in the modern people. Like especially the Gen Z people, they wanted to have that kind of lifestyle. Not like us, earlier they take a plot of land in somewhere and investing money for that one. So they wanted to have a, pre-planned houses like that. So then automatically we have the chance to have the housing industry. So we want to provide the better. We are not actually we're not selling houses. In Homeland is creating community. We want to create that culture among the people. That's one thing. And the second thing, second thing is tourism. So you know that what's the landscape development happened in the Southern Expressway. After the Southern Expressway built, so that area developed well. So the land value, increase in that area. Earlier, it's a connectivity. We want to cut short the timing from Colombo to that city area. So having that infrastructure, so that area developed well. Like that, so we want to invest more in the, connecting the infrastructure, especially once we finish this Kandy Expressway. That's a good government take a decision to finish the Kandy Expressway. So the tourists, like high-end tourists, they are not spending time we are not wasting their timing. They want to have the quick, when we go to the other countries, they will talk about distance with timing, 15 minutes time. Even though it's 100 kilometers, they'll talk about timing. So then once that connected, so definitely the opportunity creates, right? So then we have the better chance to have the hotels and even the housings and the real estate. They want to have a better, location for, they come and stay in the best places. So then real estate segments as well as the other segments, the opportunity creates, right? And the third thing, as everybody talk about, the port city. The port city, it's a tremendous location. That's we want to bring the high-end people, international investors here. So then if international investors comes, the quality and the knowledgeable people will come. The international people come. So they will find the location to live. They will ask the world-class locations, especially that's why we started, Port City, the Central Park Boulevard, right? So that's the best place, that's why we are creating not the selling houses, we are creating the community. So that's how, those are the areas
yeah,
developing.
that's excellent. Actually, you've touched on many things. The Southern Expressway, as you've said, made a huge difference. So we're actually doing a consultancy on the tourism sector at the moment. And what we're finding is that the biggest growth area in tourism geographically is still the South. And when we ask ourselves why, it's the infrastructure. Because a tourist can get off the plane and be at the beach within an hour and a half. It's a massive bonus. So quick question to all of you, or if you want to answer, related to this, we now hear a lot of talk that the East is the final frontier for development tourism. And as you pointed out, the connection between long stay tourism, the real estate sector and tourism, it's quite connected, it's overlapping. Since the 90s and so on, the concept of owning something to benefit from tourism is grown and grown now that it's accepted as mainstream. So everyone talks about taking 8-9 hours to get to the East Coast. And everyone says once we have this highway even up to Dambulla, then that prospect for the East Coast to be the next, growth engine is there. How do you guys feel about that?
Actually, for reach that area, especially that area, the highway is not enough. Sometimes speed train system. Within the Colombo area, there should be some sort of train systems. But to reach into that area, railway system not developed in that extent. Within few hours of time, if we can reach into that, eastern coastal, even the north area, there are a lot of things to, see. Especially tourists like to see that one. So then how they are going to reach that areas, in even normal highways, it's not possible. We should have some sort of speed train system to reach that one.
But
right?
that might be really unfeasible in terms of cost. What do you guys think, Romali and Roshan? Do you feel this could be the trigger and is worth the expenditure to build?
I think as a country, we can't concentrate our development. Currently, it's majority based on the main business areas that are focused on, right? So I think in the past, I think when, as you said, the roadways, that was a major development which now allows us to get to these locations. So after the war, right? So I think it's a necessity and it needs to get looked at, but whether it's the right time, because we do have as a country certain restrictions on funding availability, the debt, we also have a lot of baggage. So but it's something that needs to get focused for sure.
Excellent, yeah. Romal, any thoughts on that one?
So I think earlier the representative from BOI said that Eravur is where they're having a BOI zone for manufacturing and apparels. Actually, we were the first company to build a factory there in Eravur. I don't know whether you visited Eravur, but it's an extremely difficult area. There is not much in terms of food. There's not much in terms of labor and other resources, and it's not as romantic as it sounds when you say you're going to the east. After 8, you can't find a place to eat. So it requires a lot of development. And if you're looking at the road network to the east, this is why it's so important to plan things well, because still we don't have Central Expressway 1. And we have 2, 3, and now we're going to 4, but we still haven't developed that first stage. So it has to be done in a specific way where the expansion is sustainable. And even if we do develop all the roads to the east, if we don't have the ecosystem to survive there, like the food networks that get there, along with the necessary tourists, the staff and the personnel to serve the tourism that goes there, it becomes quite tricky. Then we are just building roads that go nowhere. So I agree with what was said. You can't just develop it as it is because it's the next biggest thing to do. It has to be in some sort of a sustained way that makes sure that it creates its own ecosystem. And the Southern Expressway was a very good example of that happening. It immediately creates all of these catchment areas. But as a result of that, of course, Bentota lost out. So, you have these trade-offs that take place. So you have to sort of look at it in a holistic way and say, is that the next place we have to develop?
Yeah, very good point. Brilliant. But then again, infrastructure is a public good. The private sector is not going to get together and build this thing to the east, even though they will benefit. So there has to be a trade-off. But yeah, I was also excited to hear that there's new effort to build these industrial zones, because even though I didn't witness it for myself, in the 90s, Sri Lanka went on a very successful campaign, even with the war, managed to get a lot of foreign investors to come and build things here. And that can only be great, because that actually was the start of the modern banking system for mortgaging and the products. It triggered so many things, right? And then led to what we have, organized real estate now, where we have gated housing in apartments. And we've all seen that. And one of the things that incubated that was these free trade zones. You had townships in Sitawaka, Horana, and Katunaik and all these places, right? Just from manufacturing. Right, okay. A lot of positives. So I'm going to turn to the challenges, starting with Saman. In your industry, what do you see as the most serious challenge? Before we open up to the audience, we'll have a...
Earlier also we discussed that in the previous session. Yeah. The biggest challenge is finding skilled labor, right? You know that after COVID and after economic crisis, so then people, what has happened to construction industry is a disastrous things happen. So people start some new, earnings. The people who worked here, they went to their villages, they start their own cultivation. Now, we face that issue because, we are building not houses, as I said, it's ultra luxury houses. To make that ultra luxury houses, we need to have very skillful people. those people should, blend with now technology. And new, when we go to other countries, you can see the finishing, because people will spend for so much of money for buying a, say about 1,200 house. The value is maybe 100 million in Port City. So still people want to buy that one. They want to spend that one happily. So, but they will expect some sort of finishing, right? So then it is the biggest problem is, not having, skilled laborers. That's one of the major things. So what we are doing, actually, I have to tell in this forum. So as a remedy, the short-term remedy, what we are, because government's not doing anything, and they may be trying something, but we started our, recently, our management decided we want to invest 1 billion to, starting a, skill development center within our company. Because we are going with government institutes like SIDA and asking them their supports, and bringing the experienced people and going all over the village areas and bringing some batch by batch people, and we are giving the trainings to them, and we are going to start, and at least they want to work with us for the 2 years and giving this NVQ levels. Right, then that we are started, right? Because very soon we are giving the graduation for them. That's sometimes we are paying very high. Sometimes the initial batch, we are giving 3 meals, and we are planning to at least pay nearly 75,000 rupees salary. So that's the motivation. If I give this normal salary, they will not come. So we want to show that we are different. Right? Then that motivation should be given. So it's one thing, right? That we start alone, but we need some more to do. And the second thing, I have another thing, and the approval process, right? So the government, Port City, it's a very fast track. It's a commission, and new laws and regulations are there. But when you're going and starting some sort of constructions, so we are facing much difficulties to get in the approvals. The people's mindset, even though this government changed, is still the same, right? So then what we want to get the, UD approvals, and they will take months and months in the years of time to give the approvals. So the investor will not remain. So the investor mindset will change. So then they will go for another investments. So that's one of the biggest challenge.
Problem, right?
Yes.
Actually, the first point also was echoed by the tourist industry yesterday during a meeting, that the productivity level wasn't enough and they're doing their own training. One of the big players, that they're also getting into training their own people. No one minds paying, any amount for a highly productive person, but they complain that when productivity is low and labor laws are strict, right? Okay, thanks for that. I'm going to turn to Romali. What do you see as a major challenge?
In terms of productivity itself, even if you bring foreign labor, productivity is not guaranteed. So it's not an easy solution just to migrate workers to the construction industry. You still may not get the required productivity level. Before, Chinese labor was looked at as lucrative because it was price sensitive as well as high productivity. But again, now the cost of labor in China has gone up. So it's not as simple as importing labor and hoping. Exactly.
Isn't it better to train the local to become more productive?
Yeah, it's very difficult because your biggest competition is, of course, they would all like to just go drive 3-wheelers.
Yeah.
So it's the when you're looking at construction, it's very difficult, right? You have to start early in the morning. The working conditions are quite difficult.
Get a better, the air condition areas to live.
Yes, so it's a completely dust environment, and when you don't have the freedom of don't have the freedom of movement. So when you go into a site, you have to work there. And if, let's say, if a youth is driving a 3-wheeler, it's very easy for them. They work when they want, they stop working when they want, and they can go pick up their kids whenever they want, and they have that freedom. So it's not even if, let's say, we, Homelands or even Tudawe or anyone gives them a high salary, sometimes that's not the compensating factor. Sometimes the compensating factor is their freedom to do what they want. And that's an issue that we are going to continuously face as our economy is getting better. So as our economic rights are improving, people want to move away from traditional work structures. So that's one issue that the construction segment has. My answer to that is a little bit broader than the immediate problem of resources. currently in the construction sector, there is a large amount of anti-competitive practices. And that's normal because in 2022, when construction stopped, a lot of these companies were starved for work. So when projects are starting again, to grab all of these projects, most contractors are now tendering 30-40% below the engineer's estimate. I'm sure when you all are also procuring for construction, you will see some very unrealistic prices being submitted. Yeah, exactly. So even for developers, when
Should the government step in to regulate price? Is that one way?
unfortunately the government doesn't understand unfeasible bids. Because they think the lower price is the best option, but it's not feasible.
It's the right price.
It's the right price, yes. And in construction, it's very easy, right? You get what you pay for. It's very straightforward. So currently, last year, around 30-40% of most most of the construction projects went 30-40% below the engineer's estimate. The other issue that I would say is impacting us a lot, and I think impacting the private sector as well, is decision paralysis from the government. So there is a delay in any kind of decision being made by the government sector. And it may be fear of audit, it may be fear of bribery and corruption charges, because when you drive forward this narrative of bribery so strongly, the flip side of that is people are scared to make decisions. I'm sure you would have experienced a lot of approval delays.
That's the thing.
That happens, and last year 1.3 trillion was allocated for capital expenditure, only 20% of that was utilized. Because people are not making a decision to do the procurement.
It becomes wastage, right?
Yes, it does. It becomes a wastage, and also you don't get that required infusion into the economy, right, if you don't spend money. The other issue that construction is always facing is a liquidity issue. And you'll see that because currently the IMF says that the Treasury has to finish its arrears within 3 months. So if there's a bill that gets presented to the Treasury, they have to pay that within 3 months. Now the Ministry of Finance says that they are in compliance with this. But what really happens is the bills that need to get paid are stuck at the SOE or the procurement entity level. So they never actually go to the Ministry of Finance. And in November, December, you get a surge of payments that come out of the Treasury into the industry. But January to September, we are starved. So these are some of the few issues that...
Seasonality, right?
Yeah, there is seasonality in liquidity.
It seems quite solvable. We'll get to that in the next forum. How about you, Hiroshi? Any pain points that you feel you can address constructively?
Yeah, I think all the points that were discussed currently impacts us as developers as well. But I do understand when Romani says that pricing and undercutting comes in, but at the same time, from the aspect of a developer, even the undercutted prices probably is too high. So that's the issue I think that comes in because the impact is that the currency has depreciated, the restrictions on imports, all that brings in to the high cost of construction as a developer. And then now in our business where it's on a leasing model and not on a sale model, it's a very capital intensive development. So unlike where you sell out the houses, this is like a very, very long-term one. And then the volatility in the interest market for our borrowings, impacts us hugely.
I guess when you add the cost of land into it, along with the high input construction cost, it's very difficult to make a business model out of it.
Definitely. And our model is also, we are on leases. So a lease term, we kind of need to stick to the rentals that we have agreed upon. It's not a model where you can, as the pricing changes, you can go and renegotiate on the leases. So
quite
it's like
sticky prices, right?
Yes.
But in India, you can. It's quite popular to purchase commercial space. Is that something you can expect here?
It is like actually, I think few properties actually have done it. I think one is WTC. I think they've done 1 or 2 floors which have been sold. And I think the most recent is OGF. No, not OGF, Cinnamon Life. Where they have sold. But other than that, that is not very popular at the moment. None of the research that we have done has indicated that that's something that where the Sri Lankan businesses have the appetite for. We haven't seen it.
But could be interesting to explore.
Yes, definitely.
Yes.
One other thing that impacts a lot of the developers is that because we are so susceptible to external shocks, our prices drastically increase beyond any other industry. So sometimes you have a 20, 25%, 30% jump in construction input cost. It's virtually impossible to price that into a product.
That's why we are having in-house arms to construct. That's why we are maintaining.
Even
so
then
otherwise, we cannot give the product.
In-house?
Construction. We are maintaining.
Okay, yeah.
That's we are developer and we are having in-house arm to construct. That's why we are maintaining. That's one of the success story.
As Romani said, your imports are highly dependent on exchange rates and vulnerabilities, right?
No. One other thing that impacts construction input cost is the tariffs. So there's quite a lot of tariffs and para-tariffs that are being introduced, and almost 90% of your construction material is imported. So when you have tax and importation, exchange control shocks, and external shock vulnerabilities, construction becomes an extremely unpredictable industry to kind of operate in.
And these developments are usually over a longer term. Yes. So and holding on to that pricing is the key. Is impossible.
Your risk is much higher. Right?
And any agreement that we have with the contractor will have a clause saying, okay, if it goes beyond 10%, they need a revision. So going into a development with that risk in place is also very difficult, unless it's a very normal kind of a pace we are in. But currently, everything is very volatile.
So some of the economists here also have said one way to avoid it is to allow the currency to devaluate, so that maybe the hit is less severe. Anyway, can we get some questions from our audience? Anything you want to ask any of the panelists? Over there.
This question is actually directed at Mr. Saman Hetcharachi regarding your Central Park Boulevard construction. Now it's 640, I believe, right? Residential units, yeah. Now, for that kind of development, of course, you need huge infrastructure support, especially waste management and sewage treatments and all that. I mean, we've heard that the backbone of the port city is actually infrastructure. Everything is in its place. But then operational efficiency is a different issue. Once you go in there, I think this question was raised earlier as well, whether the port city has that capability, the infrastructure capability to handle the kind of, I think they estimate about 100,000 population to be there eventually. Because now I live in Kotte. Now we see the one now becoming like the Bere Lake, with the new constructions that are there, the high-rise that are coming up, right? So this could well happen then to the environment of the port city as well. How confident are you that it will not happen?
No, actually, it's a planned city, right? Because they are having, even we are getting the positives, because we are in the approval process. We recently broke the ground. So even the utility supplies, everything is planned. So that we cannot increase what they have established there, right? So then even, as you said, the waste management, everything is planned. So they are having the limitations. We cannot exceed that limitation. Population cannot be exceed according to their rules and regulations. So we have to avoid that regulations, and we are confident about that.
Thank you for that question. Did you have a follow-up?
Yes, I know that that has been the case. Even when giving permission to like Capital Heights and all those apartment blocks that are coming up, the operational efficiency goes down because of the electricity consumption that is needed. So what happens is they do shortcuts. The plants are not operational. Raw sewage is discharged. So that's what's happened to the one now. It's now like Brady. You get the bloom. The bacteria plume is now well established there, right? Which is such an irony. It just happened over the last 2 years, right? Now, Bay Area, we have a huge problem, right? I think the cinnamon life, is facing that, right? So I think it's something that you have to insist on. That operational efficiency is there because the backbone infrastructure is there as a planned city, right? But whether it's operational and whether they are sticking to the regulations is the next step.
Even when you are maintaining the public areas, everything, they are very strict on that one also. Even recently we faced that difficulty. Even without the approvals, we cannot put our hoarding boards, nothing. They are very, they always having their systems to manage. So then I'm happy about that kind of planned city. So definitely it's transformative things.
Thank you.
Thank you so much. It won't be just... Sorry, go ahead. Yes.
Just to add on to the question that was asked. So all of the services are coming from the mainland. So the mainland gives all the services to Port City, and Port City at that point of receipt distributes it to the relevant plots as per plan. So whatever waste, whatever that needs to come, comes back to the mainland. So we know how the mainland works. So I think that's where your question is coming from.
Yeah, that
Correct,
was my
right?
question as well. Yes.
I am right, correct?
Yeah, only thing that there are several ways of managing that one, because they also new to that one. But those things will be implemented over the period of time. And once we finish that one, because now the Port City, the China Harbour, they still not finished their horizontal developments. So those, they consider that matters and as well. Right. So because, all these international, they want to be the international economic hub. So international people comes, they want to, convert that like a city like Dubai, like Singapore. So then they should have their own ways of it. No. There are some ways, because then actually those things will come a little bit later. Yeah.
Thank you. Any more questions? Is one late? Yes.
Yeah, thank you. Again, going back to this labor issue, which you have, Romali, you have explained quite a bit of, what is underlying this. But have you, as a construction industry, as a group of people who are working in this sector, I think that it may be important for the sector to be very, very in close dialogue and maintain a discourse with the government, because we know that this idea of people not wanting to get their hands dirty, it comes from that pre-colonial kind of awareness, and we also have this issue of that the bosses are going to be earning or are already earning much more than the DO in the DS office. So there's all this, it's like in a state of change. So is there some way that, I like this Mr. Hettiarachi's idea of maintaining your own staff and your own training center. So perhaps, there is something that needs to be done, because rather than say, look, we are not having staff, we are not having the industries, going to be affected. In the meanwhile, we are sending off all these people so that the remittances come back and make us maybe, I don't know, a richer country. But we are losing all our human, the human capacity, the humans. But is there some human capital? Thank you. But there's also this other little message that sort of it popped into my mind when Malaysia had this problem of getting the rubber tappers. They didn't want this idea like our rubber tappers, they were going off in, ragged clothes, etc. They upgraded their image by giving them a kind of a suit, gloves, a little scooty, and made people proud to be a rubber tapper rather than, carrying this many buckets around. So is there something which needs to be done urgently from your point of view, which telling the government in very firm about the current status quo?
Thanks, Kusum. So we are constantly in dialogue with the government regarding the lack of human capital in the country. There is no quick solution for this, unfortunately. And one issue that we did identify is this dignity of labor issue. Because of the way that they are being called and treated and historically looked at, that they don't find there's dignity in their labor. One thing that Tudawe is trying to do, but I don't know whether it will be successful or not, is that if we have direct labor force, like how Homelands is also trying to retain, we are going to give them an overall, and rather than say mason or anything like that, we are going to call them a technician or like a civil technician or something like that, and then give them a career path. But what was really shocking for us is when this issue came out, we directly hired labor to the company. So we said, here is a fixed salary for you. It's not based on your productivity, because in sites you have two ways of being paid. No, you have measure and pay, and you have a daily labor wage. So measure and pay is if you do more productivity, you get paid more. And sometimes laborers get about 7,000 rupees a day based on their productivity. Even with a higher pay scale than that, we still struggle to get employees to come join the company. So this is even with a higher salary. That's why when Mr. Saman was saying 75,000 bucks, I'm a little skeptical. I don't think they'll still come for that salary either. So even with 75,000 rupees worth of a salary, we offered a painter 150,000 rupees to join us. But they didn't want to do it. And when you offer them a salary, you're also offering them EPF, ETF and gratuity as well, right? But even still, they still don't want to join, because they really prefer that freedom to come and go as they please. Also, Kusum, if you noticed, after every New Year holiday, there is no labor in Colombo until like the second week of May, after Vesak is over. It's because we have a history of having unproductive labor. That's a historical thing that we have created with our labor laws. So it's not an easy solution. I am also a little bit flummoxed. I also don't know how to solve this problem. I think if we can mechanize, that might be a solution. But it's not
hybrid solution.
Some sort of a hybrid solution. Yeah. I mean, if you can plaster. If it's a factory, you can plaster. But if it's apartments and something that requires high skill and high finish, I'm also a bit flummoxed as to how to solve this problem.
Because I have been sort of seeing this issue from the other side, because I work in water management, irrigation management, and that means, we have people who have what we call seasonal migration. They start up the fields, and then they become a mason bars, then they come back again. So there is no kind, I don't like to call most of the farmers, because they are most of them part-time farmers. Correct. They keep on coming and going. In fact,
it's not just in construction that we have this issue. I talk to a lot of manufacturers who don't have labor for their factories. So even if we have these BOI zones, all of these things that we're doing to have a manufacturing drive, labor remains a problem for us.
But maybe Sri Lanka is ahead of the times, because we are right now actually at the dawn of a new industrial revolution of robotics.
That's why.
So in 5 years, we might be sitting here saying, my robots
it's possible, but construction
efficient,
industry is not possible. Yeah, very difficult.
Is there no
robotic?
technology?
We want to use some sort of. That's why I think hybrid way. You're making plaster machines. So sometimes, but totally, then they need sometimes the skilled people to finish off. Right? Plaster, we can spray the plaster. Yeah. So other things we need some skill.
Perhaps
it will just
that way.
make the process faster, but you need the individual to come and finish it.
Yes.
Yeah, even I think with robotics and AI, I think the target resources that will get redundant first is actually the higher intellectual capacity ones. It won't fix the manual labor problem.
Right. So you know that, say, a rate for a plumber in places like the UK, the rates are way higher, you know, competitive with even doctors or people.
Tilers, extremely high. In Germany, it takes 3 years to be a person who's an expert in scaffolding, as in, just tying the scaffolding. That's a 3-year course in Germany.
Those are high-risk areas, no? So therefore, you have to
Yes.
have that.
I mean, in Germany, Hiroshini is right, it's considered a highly skilled job. Now here, consider them, we don't consider them a high, you wouldn't think you need 3 years to train how to, fix scaffolding, right?
So you wouldn't believe this. I've actually donned a bright yellow helmet in my student days, and during the summer holidays, worked on, occasionally a few days here and there, and the pay is pretty good.
In
so
Australia, you have a master tiler and you learn under a master tiler for about 5 years. So it's
I was casual student labor.
That we started the institutes, the graduations, and keeping the task force, special task force for the finishers.
Brilliant. Some very useful insights. You're not going to hear this anywhere else. If there are no more questions, we can wrap up, right? Yeah, it's Friday. Thank God it's Friday, and I'm sure everyone's got places to go. I'll hand it back to our capable compeer. Thank you.
Thank you very much. Now Mr. Roshan Madawella will hand over a few tokens of appreciation to our panelists. Ms. Hiroshini Fernando, CEO, Executive Director, RIL Properties. Ms. Romali Tudawe, CEO and Director, Tudawe Brothers. Mr. Saman Hettiarachchi, CEO, Homelands Constructions. I would now like to invite Mr. Asim Mukta, CEO, Lanka Exhibition and Conference Services Private Limited, to hand over the token of appreciation to our moderator, Mr. Roshan Madawella. We thank each and every one of you for being here, for spending your time on this Friday evening. Thank you very much and all the very best.